Hey everybody, welcome to the show. Today we're diving into the exciting world of diversification. You want to make money, right? Of course you do. But putting all your eggs in one basket is a recipe for disaster. Diversification is your secret weapon, your financial armor, your key to sleeping soundly at night. Think of it like this. You wouldn't bet your entire life savings on a single horse race, would you? No way. You'd spread your bets, hedge your risks, and give yourself multiple chances to win. That's what diversification does for your portfolio. It's about spreading your investments across different asset classes, sectors, and even geographies. Believe me, this isn't just some boring financial jargon. This is about protecting your hard-earned money and giving it the best possible chance to grow. Let's break it down. All right, folks, let's talk risk. It's the word that keeps most investors up at night. But here's the thing. Risk is an inherent part of the game. You can't avoid it completely, and frankly, you shouldn't try to. But you can manage it, and that's where diversification comes in. Think of your portfolio like a basketball team. You wouldn't want all your players to be centers, right? You need a mix of guards, forwards, and a point guard to run the show. Each player has their strengths and weaknesses, and a well-rounded team is more likely to win. The same goes for your investments. You need a mix of stocks, bonds, maybe some real estate, even a sprinkle of commodities. Why? Because when one asset class is down, another might be up. Think back to 2008. The real estate market crashed and it took a lot of investors down with it. But those who had diversified into other areas like gold or bonds weathered the storm better. Diversification won't eliminate losses, but it will help manage those inevitable bumps in the road. It's like having shock absorbers on your portfolio, smoothing out the ride and keeping you on track to reach your financial goals. Let's be honest, nobody likes a roller coaster, especially when it comes to their hard-earned money. We all want those smooth, upward trending charts, but the reality is, the market has a mind of its own. It goes up, it goes down. Sometimes it spins in circles, and trying to time those swings is a fool's errand. But here's the good news. Diversification can act like a shock absorber for your portfolio, smoothing out those wild swings and making the ride a whole lot more comfortable. Think of it like this. You wouldn't want your entire portfolio to be invested in high-growth tech stocks, would you? Those babies are exciting, they can skyrocket in value, but they're also volatile. They can crash just as quickly as they soar. Now, on the other hand, you wouldn't want all your money in super safe government bonds either. They're stable, sure, but they're not exactly going to make you rich. The key is to find a balance, a mix of assets that can zig when others zag, a portfolio that can take a punch and come back swinging. That's what diversification does. It helps you stay calm and collected when the market throws a tantrum. It prevents you from making rash decisions based on fear or greed. It's about staying the course, riding out the storm, and coming out stronger on the other side. Remember, investing is a marathon, not a sprint. It's not about getting rich quick. It's about building wealth steadily over time. And diversification is your secret weapon for achieving those long-term goals. Now I know what you're thinking. Diversification is all well and good, but I'm here to make money. I don't want to just tread water. I want to see those returns. Well, here's the thing. Diversification isn't just about managing risk. It's also about maximizing your opportunities for growth. Think of it like a buffet. You wouldn't just load up on mashed potatoes, would you? No way. You'd want to sample a little bit of everything, try different flavors, see what tickles your fancy. The same goes for your portfolio. You want to be exposed to a wide range of asset classes, sectors, and even geographies because you never know where the next big opportunity is going to come from. Maybe it's tech stocks leading the charge one year, then emerging markets the next, followed by a resurgence in commodities. The point is, you don't want to miss out on those potential gains because your portfolio is too narrowly focused. Diversification helps you cast a wider net, increasing your chances of reeling in those big fish. It's like having multiple lines in the water, each one baited for a different kind of opportunity. And here's the beauty of it. You don't need to be a genius to diversify effectively. You don't need to have a crystal ball to predict which sectors are going to outperform. All you need is a solid strategy, A diversified portfolio that aligns with your risk tolerance and financial goals, and the patience to let your investments grow over time. Let's face it, the economy is like a roller coaster. It has its ups and downs, its twists and turns, and trying to predict its every move is a fool's errand. But here's the good news. You don't need to be an economist to protect your portfolio from its unpredictable swings. The key is diversification, specifically diversifying across different sectors that tend to perform differently during various stages of the economic cycle. Think of it like this. When times are good, when the economy is booming, people are spending money, they're going on vacations, they're buying new cars, they're upgrading their homes. That's when sectors like consumer discretionary, technology, and industrials tend to thrive. These are the companies that benefit from increased consumer spending and business investment. But what happens when the economy starts to slow down? When people tighten their belts, when businesses become more cautious with their spending? Well, that's when those high-flying sectors tend to take a hit. But fear not, because that's when the defensive sectors step up to the plate. These are the companies that provide essential goods and services that people rely on, regardless of the economic climate. Think utilities, healthcare, consumer staples. By diversifying your portfolio across both cyclical and defensive sectors, you're essentially hedging your bets against the unpredictable nature of the economy. You're ensuring that no matter which way the wind blows, your portfolio has some sails that can catch it. Listen up, investors, because this is important. We live in a globalized world. A world where borders are becoming increasingly blurred, where companies operate in multiple countries, and where opportunities for growth can arise from every corner of the globe. That's why limiting yourself to just your domestic market is like going to a buffet and only eating the breadsticks. You're missing out on a whole world of deliciousness. Global diversification is about expanding your investment horizons, venturing beyond your own backyard, and tapping into the growth potential of emerging markets, developed economies, and everything in between. Think about it. Different countries are at different stages of economic development. They have different growth rates, different industries, different demographics. By investing globally, you're essentially diversifying your portfolio across a wider range of economic factors, reducing your reliance on the performance of any single country. It's like having a safety net for your portfolio. If one market stumbles, another might be there to catch you. If your domestic market is experiencing a slowdown, an emerging market might be booming. But here's the thing. Investing globally isn't just about picking stocks from different countries. It's also about understanding currency risk. When you invest in foreign assets, you're exposed to fluctuations in exchange rates, which can either amplify your returns or eat into your profits. That's where currency hedging comes in. It's a strategy that helps mitigate the impact of currency fluctuations on your portfolio. Listen up, because we're about to talk about the most unpredictable market of all, the human mind. We all know that investing is as much about psychology as it is about numbers. Fear and greed can drive even the most seasoned investor to make irrational decisions. But here's the thing. Diversification isn't just about protecting your portfolio from market volatility. It's also about protecting it from yourself. Think about it. When you're diversified, when you know that your portfolio isn't overly reliant on any single stock, sector, or asset class, you're less likely to panic when the market takes a nosedive. You're less likely to make those knee-jerk reactions that can derail your long-term investment strategy. Diversification gives you peace of mind. It allows you to sleep soundly at night, knowing that your investments are spread across a variety of assets, each with its own risk and return profile. It's like having a financial security blanket, one that provides comfort and stability during times of market turbulence. When you're not constantly checking your portfolio, when you're not glued to the financial news, you're free to focus on what really matters, your long-term goals. You're free to enjoy the journey, knowing that you've taken the necessary steps to protect your investments and set yourself up for success. Diversification fosters patience, a crucial trait for any successful investor. It allows you to ride out the inevitable ups and downs of the market, to trust in your strategy, and to reap the rewards of long-term investing. There you have it, folks. Diversification. It's not just a fancy financial term. It's your roadmap to financial stability, your secret weapon against risk, and your key to unlocking long-term growth. Remember, in the world of investing, diversification is not about avoiding risk altogether. It's about managing it wisely. While diversification doesn't guarantee profits or completely eliminate losses, it significantly reduces the likelihood of severe financial setbacks. It's about spreading your bets, hedging your risks, and positioning yourself to weather any storm the market throws your way. So take control of your financial future. Embrace the power of diversification. Thank you for watching, and don't forget to like, share, and subscribe for more investment tips and strategies.